they'd been talking about it for so long, and he was looking forward to being marked.
It's a big deal that finally they've unveiled the platform.
Yes. Is it a derivatives market as we understand it in other parts of the world?
It's plain vanilla products.
Yes.
You know, pre-funding your account, cash settlement.
Yes. Can you short a stock outright if can you do like a pair strategy, go long one and short another? Can you do this kind of thing?
You can do that kind of thing, but you have certain limitations. One is the basket of stocks is only 5 stocks.
Yes, which ones are those again?
So it's Equity Bank, KCB, Safaricom, BAT, breweries, yes.
Yes, so those are the 5.
The 5.
Yes.
It's a very limited basket of stocks.
I
would love to short Kenya Airways, Ali Khan.
You would, but we were just discussing that. It's had a great rebound. It's above 5 bob.
Yeah.
We could have bought it down there at 3.
Yeah, I would love to short it.
You think the equity is worth 0 in Kenya Airways? Just to pick up on that point.
The equity is worth 0. Actually, it's below 0 now.
Yes, it is.
And I think for me, Kenya Airways is a tough one.
It's a tough one.
It's a tough one. I'm not sure if the government should actually be buying it back.
But had they got an option, George, when we look at that, if we want to be a hub, if we really are saying that we are a player on this African continent and we don't have an airline, what's going to happen?
But I'm more worried, Ali. What's our tourism strategy?
Yes.
I mean, you look at Dubai.
Yes.
They've built Dubai around being a redistribution hub.
That's right. That was quite visionary. I must give him credit.
90 million people passing, almost 90 million people passing through Dubai.
Yes.
And they do short stays, 2 hours, 3 hours.
Spend money
within the airport. Then the next fourth hour you fly out to where you're going.
Yes.
Do we have that vision? We don't have it. I think I need to see a tourism blueprint.
Yes.
That makes Nairobi is a hub. We bring in maybe a plan like bringing in 20, 30, 40 million people sitting in JKIA, then that makes Kenya Airways a very strategic asset. We don't have a blueprint, So I don't see where Kenya Airways derives its tag of national strategic asset from.
Okay, okay. But let me ask you, let's turn that question around. Could Kenya survive without Kenya Airways?
Yes, it can survive without Kenya, yes.
What, we'll be flying on Qatar and Emirates and what have you?
Look at the frequencies of Ethiopian Airlines.
Yes.
Qatar.
Yes.
Emirates.
But the trend across the continent has been for every leader now to get his airline. Rwanda Air, you've got Ethiopian.
I think airline is a much more tougher business than they think about it. I mean, Emirates
wafer thin margins.
Yeah, I mean, and you deal with some variables that are out of your control. You're dealing with global interest rates for your USD borrowings. You deal with political unrest. Who would have predicted that 5 months ago? Who would have predicted that Sudan they would have to close the airport for some time? Who would have predicted that Libya, for instance?
Yes, which is never improved.
So you're dealing with certain variables that are beyond your control as management, for instance. You're dealing with global interest rates. Whose movement? People decide on interest rates.
Some countries you can't get your money out.
Yeah,
Zimbabwe,
look at the currency crisis. You're dealing with, look at oil prices.
Yes, yes. And most airlines have not managed oil prices well. Very few.
It's a big of a monster for all of them.
Let me jump you now to something that I was talking about in the first half, which really took me aback, which is that 22% of total advertising spend last year, which according to those numbers was $918 million, was betting. That's nearly $200 million from nothing in 2014. What do you make of that? And there's been a much harder, rougher approach to these betting companies. I mean, this could affect a lot of people if that spending slows down. At the same time, have we got a societal problem that we're encouraging all our people to kind of play the lottery, right? In the old days, people used to tell me the lottery, Ali Khan, is a poor man's tax because everybody goes in there thinking I'll get $1 million and they never do. Meanwhile, they're paying $10 million for the privilege to the betting company. So what's your read on that?
I think that I'm struggling to put my fingers around the big picture, around, especially with the news we woke up to today yesterday that the government has ordered Safaricom to suspend those pay bills, including for SportsPesa, that is doing 80% of the market. I think that if there's an issue with taxation, then they need to go back to the legislation. and draft new legislation and say, you guys, this is your new tax code, you know, could you comply?
The Treasury, according to some reports I saw, is collecting $150 million. You know, that's a lot of money.
It's a lot of money.
Yes.
I just don't know whether, you know, sometimes state interventions leave you baffled.
Yes.
Yeah, you know.
Quite often.
Yeah, quite often.
Especially in Africa.
You can't put your fingers around what is the big picture, what's the underlying issue around this. But I certainly think that even, especially for the telcos,
yes,
as much as advertising platforms are going to suffer, even the telcos themselves.
So have we got any idea of what the value of betting is to the telcos?
Yeah, we were doing some back of the envelope calculations just the other day, and we were talking about $80 million.
$80 million.
Between $80 to $100 million.
So pretty
annual
big
revenues.
Oh.
It's a big business. It's a big business.
Yes, and that must be also mobile money. It must be SMS blasts.
Yes.
There must be a lot of activity going on.
There's a lot of activity going on, especially with the small ticket. You know, the betting in Kenya is a very small ticket business.
Yes.
100 shillings, 200 shillings.
Yes.
That's why you're saying it's a poor man's. What did you call it again?
They call it a poor man's tax. You know, the lottery. Because that's what it's more people who are not well off tend to play it.
I really hope they're able to resolve this in the next coming days, because I certainly don't want to see some of those companies leaving.
Yeah.
Yeah.
Let's jump to a tweet I was reading from you, which was about this new regulatory framework around assets for insurance companies. Tell us a little bit about that. Give us the big picture.
So the thing is that the Insurance Regulatory Authority has issued fresh guidelines, capital adequacy guidelines, and this one interesting bit that they've introduced, which is they've introduced a new class called property risks.
Yes.
And they've introduced capital charge for property risk. So they're saying that if an insurance company is holding land, then they have to, the capital charge for that is 40%, at the rate of 40%.
Yes. Does that mean physically they got to set aside 40%?
Yes, if you're holding land worth $10 million,
yes,
you're going to have to put aside 40% of that.
Wow.
As capital charge.
Against the risk of depreciation in the asset, is that?
No, actually the whole point of capital charge is that because some assets, you can't realize them. The ease of realizing them sometimes is very difficult.
Okay, so liquidity.
In terms of distress.
Yeah.
So you put aside a certain portion of it, of its value, to provide you with liquidity buffers. So you think about, if you think about a company under distress and they want to sell the properties, properties are never liquid. You can't realize them tomorrow. So you're going to have to take a couple of days before you realize them. So as you are waiting to realize them, you're going to have the capital charge, the buffer, you're going to give you some buffers, liquidity buffers essentially, as you wait to sell them. That's the whole point. And the premise of these charges is because the nature of insurance, especially for general insurance, is a shorter business.
Yes,
it's a 12-month business.
And you were telling me what they're doing is using short-term money to make long-term investments.
Yes, and then what happens if your liabilities crystallize? If you have general insurance, for instance, they issue 12-month insurance covers. Yeah, they write 12-month policies. And if you take a 12-month premium and you buy land somewhere, if that risk crystallizes, the turnaround in realizing that land can sometimes stretch. And you have situations where some insurance companies are unable to pay claims because they've diverted the money, bought some illiquid fixed assets that they can't liquidate on demand. It takes long. So the regulator is basically saying, if you're an insurance company, then look, if you want to hold I'm going to make it so expensive to hold fixed assets, because the nature of your business is that you need to settle claims as they fall due. Now, when you hold a third or 40 or 50% of your liquidity in assets, it becomes difficult. Now, the implication of this new guidelines, I see a number of, especially general insurance companies, selling off and winding off their properties in the next couple of months. So
let me come back to that. I mean, you showed me this graph which shows that general insurance companies have invested about a third of their premium into real estate.
Yep.
Now, this was a good trade over the last 10 years. If you look at it, property prices have gone up. It's been one of the sweetest trades, I think, about threefold you could have made if you take a 10-year sweep of it.
Yeah.
But every indication is that we're in an illiquid market right now, that we're still in price discovery, that there isn't much volume going on, speaking to your 40% buffer story, that the price discrepancy between what people are asking and what's being transacted is very wide. is it a very risky moment now? If you're trying to dump real estate, are you going to be able to dump it?
I think you're going to have to take some discounts.
Yes.
I mean, you talk about discrepancies between the ask
Yes.
and the actual transaction price. There's even a bigger discrepancy in the movement between property prices and rentals, especially when you talk about commercial and
So what you're saying
The
is
price
yield has gone.
The yields are going down, going down, going down, going down. Go down 1, 2, 3.
Yeah.
So it speaks to price discovery. It's a very important aspect
Yes.
of this market.
Yes.
It's a lot of opacity. There's no clear framework on price discovery.
Yes.
I don't know. I mean, I think pricing, real estate pricing in this market is largely a sentimental issue.
Yes.
Yeah.
We're sentiment driven.
Yes, sentiment driven. You know,
So
relative valuation. You know, my neighbor just sold his house for $1 million.
Yes, I want
to
to
buy mine.
Yes.
And $1.5 million.
Yes.
There's no methodology.
Is that right?
Yeah, that's how it happens. Sentimental.
So now, are you basically saying that our insurance companies are overweight real estate, and this is now a big problem?
Yeah, I think for me, I've always said this before. Especially general insurance companies,
Yes.
they're overweight properties, which should not be this case. And I'm happy that the regulator has recognized this and has made it so expensive for them to continue holding properties.
But what it essentially means...
And the problem also, you say that there's a big discrepancy between the ask and the actual price, and it shows you that the market is overvalued.
Yes.
Massive overvaluation.
Massive, how big?
I think I could say it figures between 30 to 50% of overvaluation.
Are you therefore predicting a price
correction
of that type, that nature?
I know properties where I was being told where the actual buying price that was being put on the offer price was actually in the region of 30% below what the valuer is saying.
Wow.
Yeah, because the buyer is looking, if it's a commercial property like the building where we are in, if you want to value the property based on the annual cash flows.
Correct.
Yeah.
Yes.
And if you look at if you project the annual cash flows of a certain X amount of time,
yes,
and you look at what the valuer is saying, you see some significant discrepancy. Yeah.
So, okay, so we need to keep an eye on that, George, and see how it develops.
We just keep an eye how it develops. I've already seen two insurance companies.
The CIC you spoke
CIC,
about yesterday.
They were trying to unwind.
Did they manage to unwind it?
Some of the properties are quite big ticket.
Yes.
I don't think you can do them in a day or on 2 or 3 or a week.
Yeah.
Takes some time.
Okay.
I mean, Uchumi has been trying to sell some piece of land.
They still haven't sold that land?
They still haven't sold.
But that had a caveat or something for a while. And then we've got all these iconic buildings in Upper Hill. Are they fully let, or what?
We were just having a show today about property prices, and
yeah,
we were told today that the commercial market is in a glut to the tune of 5.2 million square feet.
Whoa! So that correction now to absorb that will take 2 years, 2.5 years.
How do you unwind 5.2 million square feet excess capacity?
Yes.
Probably need 3 years. Of non-new developments coming.
Yes.
Yeah.
Which is not going to happen.
Which is not going to happen.
Yes.
So we're constantly going to be in a glut position in the market. I think generally for me, properties, to be careful.
Okay.
Ali, you have to be careful, Ali.
Yeah. I'll be careful. Thanks for telling me. Now, turn to the banks.
Yeah.
We've had lots of very interesting discussions. We've had these fintech boys that come in here and want to disrupt everybody. We had Governor Jorogi, who is not taking kindly, call them Shylocks today. What's your perspective on the banks?
Look, two things. One is that yesterday I watched the governor, the Central Bank of Kenya governor, was speaking to parliamentarians, and he was basically saying, he was laying a case for regulating the digital lenders.
Yes.
It's the second time
he's
laying the case.
Yes. Did he succeed?
He succeeded. I think he basically, from what I've seen over time, he's basically onboarded, got the MPs to his side, and I could see some movements in the next couple of weeks on that front. I'm just wondering the form that regulation can take, especially for these guys. These guys are very elusive,
Yes.
They're not physical.
Yes.
You don't see anyone.
No.
It's not like a bank is in a branch.
It's a non-branch.
Yeah, it's a non-branch.
It's on your phone.
Yeah, it's a phone.
And the app could disappear.
Yeah, it could disappear. You could I think for me, let's go back to early 2018.
Yes.
The Treasury floated a bill, which is called the Financial Markets Conduct Bill.
Yes.
And in that bill, they proposed to create a body called the Financial Markets Conduct Authority. Now, this conduct authority,
which was going to consolidate all the regulators into
all
one.
all the credit-only institutions, all the credit institutions actually, including deposit-taking and credit-only institutions. Well, it's died, but I think, I mean, you go to the UK, Ali, you got the Prudential Regulatory Authority and the financial, the FCA. The market conduct, Central Bank, by its nature, it doesn't know how to regulate market conduct. They're only concerned with the prudential, which is a wholesale regulation of prudential regulation of the wholesale market. Now, the interaction between consumers and the entities, someone needs to look at it. And there's a lacuna which the central bank governor was talking about, and that lacuna is what these emerging platforms are taking advantage of.
Yes.
Yeah. We need a conduct authority.
But when I speak with those guys, they tell me, Ali Khan, we're providing a service. We're providing credit to people that the banks are not giving credit to. And when I argue about the interest rate, they say, hang on a second, most of our people are borrowing money in the morning, paying us back in the evening. We're giving them capital in order for them to make a living. And some guy came and showed me all this stuff, borrows 1,000 in the morning, 4 a.m., goes and buys some fruit, sells it, pays back the loan. So are we discounting the value of what they've provided to the wananchi or not?
Well, you need to give them credit for that turnaround, the immediacy aspect. They have a quick turnaround.
Yes.
You apply, 5 minutes later, you get your credit. Now you got to give them. And I also think that their funding, I think I tend to... I mean,
the governor was asking questions about that, but I mean, it seemed to me that on the funding side, what these guys have been doing is going and getting quite expensive, but wholesale money out of the US markets and so forth. Is that right?
Yeah, that's right. And also locally, I mean, I know Branch is raising money at 18%.
Yes.
Which is quite exorbitant.
Yes.
In local currency, 18% is quite exorbitant.
But probably a good investment from our point of view.
Yeah,
if you
because
were to put
you're charging
money
60% a year.
Yes.
You can recover your cost.
Yeah.
But I think if the conduct bit needs to be looked at, especially issues around pricing.
Yes.
Some of them are not ethical. I mean, think about someone sending a text to your daughter that your dad has not paid.
Are they doing that?
Yeah, they
That's
do that.
shocking.
Yeah, they do that.
Oh boy.
Oh,
they
invade your phone book, Ali.
Yeah.
If you're overdue.
Yes.
Yeah, please remind your daddy.
Are you serious? No, that's beyond the pale.
Remind your daddy that his loan is overdue.
Oh wow.
Yeah.
Yeah.
No, I think those.
So
are
it's quite intrusive.
Those are the extremes that now, that's catching the eyes of the authorities. Those extreme actions. Some of them, you know, I think there's also an issue of disclosure.
Yes.
What are some of the hidden fees? They charge you some hidden fees you don't know. So it's question essentially what is the APR?
Yes.
Yes.
So you are behind the governor on this point.
Well, I think they need some bit of oversight. I mean, the UK, for instance, has struggled to bring payday lenders
under control.
Under control. Because
but today, in the UK, are they being regulated? Those
there's well, maybe not prudentially, but there's some there's some level of oversight of what they're doing. Because, you know, the UK and payday lenders, there's been some sad stories.
Yes.
The question is, I think the issue is you don't want to drive over indebtedness, household indebtedness.
Yes.
As a government, you tend to get worried when household indebtedness, like where we are.
Would you say we have a high level of household indebtedness?
I think so, and I hope that the Kenya National Bureau of Statistics is doing that survey in the upcoming census.
Okay.
Household indebtedness should be a big concern for people. Yeah.
George, I was looking at that, and there was this report on Bloomberg saying, had you bought Kenyan Eurobonds, you would have returned 20%. I mean, that seems to me the best investment to have made for everybody, right? I mean, if you're an insurance company, had you been long Eurobonds, you would be laughing all the way to the bank with 20%, as opposed to worrying about selling some property which there are no buyers for. When you look at East Africa, what trades would you be recommending to people in the next few months into year end?
I think on the fixed income front, the Eurobonds.
Still a buy?
Still a good buy. I mean, early today I was reading that Germany just auctioned a 10-year bond.
Minus 0.26%. Zero coupon.
Yeah.
Can you believe it?
You're paying the government.
I mean, isn't this voodoo economics? Because, I mean, I look back at it, how can this be? I mean, you know, they talk about inflation and lack of inflation, but What's your view on this? Are we at a tipping point moment when suddenly inflation's going to rear its head? Or has the gig economy killed inflation? And are these bonds still a buy? I don't know. I don't know what's going on. What do you think?
You're selling a 10-year bond at sub-zero.
So it doesn't 100% debt to GDP. Who cares? You're getting free money, right? You're being
the government is getting free money.
Yeah,
you're paying the government to take your money.
Can you believe it?
To warehouse your money.
Yes,
you know,
but that's why you're getting these anomalies like people hoarding 1,000 Swiss franc notes, because you're better off keeping it hoarded unless the rats get to it. But if you can hoard it, you're better off than losing money every year paying a negative interest rate.
I think it speaks to a structural issue across, especially some of the OECD countries.
Yes.
They're struggling to get inflation up.
Yeah.
And it's just, Ali, it's just a question of how much upside can you get from helicopter money.
Yes.
You know, it's
helicopter money, of course, everybody, is the idea that the economy is in such a bad state that you literally throw money out of the sky, which people are forced to pick up and spend. This is the helicopter money theory.
It's helicopter money.
Do you think, because more and more of these economists that I follow seem to be talking about helicopter money as the final solution to all this? I mean, is that likely?
We've been in a helicopter. The US has been dropping money from the helicopter since 2009, I think.
Yes.
Actually, 2008.
Yes.
When the top,
all those.
Paul Hankson.
Yes.
Gave, is it Ban Bernanke the big key?
Yes.
The Treasury.
Yes.
Go open it.
Yeah.
Bring out the money.
Yes.
Give the banks.
Yes. Europe has been dialing it up.
Yesterday.
Yeah.
The U.S. Federal Chairman of Federal Reserve.
You listened to what he said?
I listened to what he said. He's raising concern with inflation.
Yeah.
But inflation is still going down.
Yes.
How much more helicopter money can they keep dropping?
Yes.
Yeah. And I think for that, we'll likely continue seeing a lot of those money looking for home in Africa.
So you think this sort of strong bid we've seen in the Eurobond market should continue?
It will continue. And I think even if the Kenya was to venture into, I think they'll do another Eurobond this current fiscal year.
They will?
Yeah, they have to.
Have you
seen the budget deficit?
Yes.
It's a gaping hole.
Yes. How big is the hole?
It's $7 billion.
Yes.
Of course, if you exclude grants,
yes.
$7 billion. They're talking about $3 billion being sourced externally.
So that will be a $3 billion Eurobond.
That will be a $3 billion Eurobond. And I think they'll still continue receiving strong performance.
Yes.
When OECD countries still continue selling bonds at sub-zero rates.
Yes.
Yeah.
So so it's really a foreign impulse which is creating this demand,
but
which is actually quite fortunate given the circumstances.
Yeah. But the key risk here is inflation starts picking up across the Atlantic, the US, and
then all bets are off, right?
Yeah. And the bets are off, and inflation starts keeping up at 10 basis points.
Yes.
And then you'll see a flight.
Whoa.
Yeah.
That could be the end of the party.
It's showtime.
Is this 4 o'clock in the morning or is this midnight? That's the question. George, pleasure having you on the show. Ali. This was Metropole TV. This was The Smart Investor. My name is Ali Khan Satchu. It's been a pleasure being with you for the last hour. And we had George giving us a broad sweep of all kinds of things, including the property market, insurance, balance sheets, and helicopter money. Don't forget that. That's a great thought. Thank you for watching the show.